Welcome back. Now, the Absa PMI has bounced back in April after dipping below the neutral 50-point mark in March. The headline PMI has risen to 54 in April. This largely thanks to improved business activity driven by a period of no load shedding, along with a boost to new sales orders. Miyelani Maluleke, who's senior economist at Absa, joins us with his analysis of this PMI reading and what it suggests for the factory gate moving forward. Miyelani, an absolute pleasure. Good afternoon to you.
Good afternoon. Thank you very much for having me.
Brilliant. I had a big smile on my face today when I saw that we had breached that neutral 50 mark. Let's talk about that, Miyelani, and if this is indeed something worth, celebrating even just a little.
No, you're absolutely correct. I mean, we always have to be a little bit cautious. It could very well be a question of whether this is, just one swallow and whether it's sufficient really to make a summer. But of course, I think given where we're coming from, it's in a space where activity in the sector has been very volatile because of various supply side shocks, the unreliable supply of electricity, the logistics challenges that we've had, particularly into late last year, is definitely a very encouraging print. And I think, of course, part of it is due to the fact that we haven't had load shedding in a while. And of course, for a sector like manufacturing, which is very energy intensive, that environment is always going to be very helpful. But I think there was another part of the numbers, which I thought was very interesting, very encouraging, and if sustained, could be quite positive for momentum going forward. And that's new sales orders, right? I think we've been talking for the past few quarters just about how, although a lot of the focus on the growth challenges in South Africa has been on the infrastructure deficits, but just the fact that demand itself has also been quite weak. Households in particular have been under a lot of pressure from high inflation, from high interest rates, and that demand environment has been quite weak. But what we're seeing in these latest PMI numbers is new sales orders picking up and manufacturers telling us that, when they look at international and domestic demand conditions, what they actually saw was that it was mostly domestic demand conditions that improved. And it's one number. We want to be cautious, but certainly I think very encouraging. Both I think in terms of the sector benefiting from more stable infrastructure environment, and also some encouraging signs on domestic demand.
It really is encouraging indeed, and I must ask you also, as we speak about the fact that we are seeing a less load shedding here, and we're seeing a slight demand in a slight increase in demand here. This is 1 month. We of course have to look at it for a little bit longer to see what the trend line might look like. But what it does reflect here is that just a slight improvement in the infrastructure challenges and the direct impact that it can have on a sector like manufacturing. And I'm just keen to get your thoughts on that. If we just keep seeing this little uptick here, we could actually see the sector making a real recovery.
That's absolutely correct, because I think, one of the things that you could also start to have in terms is that as you get this improvement in a sustained way, it starts to generate spillover effects into other parts of the economy, right? So I think there is no doubt that, I think an environment in which, infrastructure continues to do better in a more sustained way would certainly benefit the economy more over the longer run. Because one of the things that you could also start to have, which we haven't had in a very long time, is that confidence could start to come back, right? You could start to see, some players that have held back, some of these large, possibly very energy intensive projects starting to say, look, the environment is different. And maybe you start to see that confidence coming back and investment in this space also picking up. And that on its own, I think, could also generate some very significant, second order effects for the economy. So we do need an environment in which infrastructure not just performs better, but performs better in a sustained way.
What's also interesting here is the purchasing price index. And Miyelani, keen to get your thoughts here. I think it's still quite high, and I think you point out a very similar thing in the report that we got out this afternoon. We are seeing some sort of improvement, but still quite a high cost environment.
Yeah, it is quite high, and I think there's a number of factors here. some only affecting, I think, some parts of the manufacturing sector. So, of course, one of the big factors that I think is affecting everyone is fuel prices. We have seen that I think since the start of the year, Brent crude oil prices have gone up from something like $74 a barrel. We got to something like 91. We're down a little bit now. But we've been in a space where fuel prices have gone up quite a bit. And I think that's added quite a bit of pressure as far as costs are concerned. But there is also another specific subsector of manufacturing where I think there may be a bit of cost concern right now, and that's food manufacturing, right? Because I think over the last few months, one of the things that has become clear is that the damage of the drought or the El Nino does look like it's going to be quite a bit larger than what was expected late last year to start of this year. And we've already seen crop prices, shoot up quite significantly. The cost impact of that is going to be felt in food manufacturing, and I'm pretty sure that there's already some concern about the degree to which those cost pressures they will be able to sort of pass them on to the consumer in this environment.
Very interesting, man. And before I let you go, I want to touch on the supplier deliveries index as well as expected business conditions here. I think both of them are just showing very interesting dynamics, even though we're very optimistic today.
Yeah, I think when it comes to just expected business conditions in particular, I mean, it did drop a bit. I was a little bit surprised by that, but maybe the reading before that I think was a bit of an overshoot. But I think for me, the key thing is that, that particular sub-index remains above 50. So on balance, there's still quite a bit of optimism, I think, in the sector. With respect to the suppliers deliveries index, I mean, we've seen, Anutana, that over the last few months, it did pick up. When we had the port issues in Q4 of last year, you saw a massive increase. That increase was related, I think, to infrastructure problems. But I suspect that this latest increase that we're seeing here is probably mostly just a result of, much higher levels of activity, and those higher levels of activity, starting to create a little bit of bottlenecks in the supply chain. I'm hoping that this is not something that's going to be sustained going forward.
Brilliant, Miyelani. An absolute pleasure having you unpack this one for us, and also just great to unpack a printer that is above 50 today. Thank you for your time. That was Miyelani Maluleke. He's senior economist at Absa.